Good afternoon, everybody. What's up? We should be live on YouTube. We should be live in the virtual trading floor. Today is Monday, January 8th, 2024. And I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and a member of FINRA/SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, I am out of Apple and Snap today. I got out of both of them into the sub move. And I lightened up on probably everything else in here, or almost everything else in here. Not everything. Almost everything. Let's talk about it. So, it was a day. SPYs closing up 1.4%. Big up Qs 2%. Solid. IWM 1.9%. Very impressive. Very, very impressive up move. And we finally are potentially, probably confirming our pivot low here on the market. It's only the pivot low on the daily chart of an uptrend if an actual new high comes in on the daily. But this is what I was looking for last week. You really had to be patient. Early last week, I think I was pretty good with the patience. By Thursday, Friday last week, I was itching for the pivot to come in, just really trying to keep in mind that the market had such a big up move that it could overshoot on the downside my expectations of where a potential pivot low can come in. And it did. It did overshoot on the downside, especially with the Qs in the IWM. It overshot on the downside on the pullback on kind of where I thought that the pivot would come in. But that's why when you're looking for the pivot low, you want to try to be able to buy things on the way up. So the key was really patience, right? Even as early as Tuesday last week, we're gapping down into equilibrium. Is this it? No, it's not it. Wednesday, we're gapping down again. We're close to the 21 EMA. Is this it? No, it's not it. Thursday, okay, day 4 to the downside. Are we going to bounce today? Well, we tried to bounce a little bit and then we failed, so it still wasn't it. Friday, okay, Friday. Well, here we have a signal from non-farm payrolls. Market's still in this area where it should pivot. It's a day 5 to the downside. We immediately sell off on the number, but we negate the sell-off. We get back above the starting price point, and the morning session looks really good, and the afternoon session kind of rolled down and failed and still didn't fully look right, even if the trades on Friday worked. And for myself at least, I was trying to come in with more conviction there for the pivot. And Friday was a tricky day because it felt like all the trades worked, yet I came away disappointed from the lack of follow-through. Well, here was the follow-through. The follow-through came today, and the follow-through was kind of vicious to the upside. The common saying in trading is you take the escalator up and the elevator down, and this market for like half a year has almost been seeming like the opposite, right? Ever since the July high, the sell-off that was about 11% in the S&P from the July high to the October low, it took months for that to happen. It was really kind of the escalator down, and then November and December was a face-ripping elevator up rally, and then it was almost the same thing here with the 4 or 5 day pullback in the market, followed by this kind of rip higher. But again, this is what we were looking for. I've been saying that position and sentiment are neutral in an area where it's like, yeah, we could certainly sell off. And this morning we were talking about SPX 4650. The S&P loses 4650. That you flip to negative gamma and you hit a point where the CTA selling will be forced to increase. But we stayed above our key support levels, and while we're above those key support levels, I'm still looking for this pivot to come in. We are still in an uptrending market. I do still think that positioning and sentiment is neutral. It's not a screaming buy, but not a screaming sell, at least not at this point. And let's let the pivot come to us and try to buy on the way up. And I still go back to what I went over in an afternoon meeting. Maybe it was like Wednesday of last week. I don't really remember which day it was. Might even have been Tuesday. Well, hold on. Tuesday was the first day, so it must have been Wednesday. Must have been Wednesday, where I just talked about how I feel some of the best risk reward setups in the market are when you're looking for trend continuation off of that next pivot low in an uptrend or pivot high in a downtrend. But we discussed, the right way to be able to capture that, and then how it can lead to a great risk reward. So now the market has shown us it's attempted. This is the attempt of the pivot for sure. The question is, do we break the December highs? In which case, then you're confirming uptrend continuation on the daily chart, and this is just a very normal technical pullback in the SPYs, Qs, and IWM. Or do we get up there and make some sort of equal high, or we don't even get up there, we make a lower high tomorrow and then work our way back down, in which case you have the beginning of maybe a potential reversal pattern or something like that. We don't want to assume the reversal. If anything, if you want to assume anything, you want to always assume trend continuation. That's what you want to assume. So if you came in on Friday and you were aggressive, it was the right move, even if you didn't get the follow through. Maybe there were some positions that closed well enough that you were able to keep them to the long side, and otherwise there was opportunity today to be able to get stock. We discussed that we were above these important support levels, and that I was planning on trying to be aggressive to the long side as long as we're above those important support levels. But we needed to clear out through some key resistance zones. One was breaking the 15-minute downtrend, right? This SPY 15-minute downtrend. We've just been in a pattern of lower highs and lower lows since the last trading day of December. That would begin to break above the 2 p.m. high from Friday, which is basically 469. So we broke that early, but then that was right in front of big resistance in this 470 to 471 area, where you can see that there are several tight lower high pivots on this 15-minute chart. And we struggled in that zone a little bit today, midday, but we eventually cleared that also. And it was really led, though the IWM was weak off the open and played a lot of catch up. And the IWM also got back above 196, which we were saying was a key level. We were really led by the Qs, and we were really led by NVDA and to some degree AMD. But the Qs broke hardest. They broke first. Just a really, really strong up move from the Qs to get back above and hold above $400, which we said was a key level on the smaller time frame for the Qs to get above. And again, it was led by NVIDIA, which is awesome because to give myself a victory lap, I got to take it where it's due. I have a really awesome P&L in NVIDIA, which is great because I had a lot of conviction in the idea. I've been trying to stick with this NVIDIA really since the last week or so in December, which wasn't always an easy trade, kind of just seeing this ascending triangle that was coming in. Had a few smaller time frame failed trades along the way, and then this thing broke down and I was able to stick with it. We created that pivot low on the 3rd, which became kind of my line in the sand stop loss. We showed relative strength on the 4th. And then the 5th is when we got the Bank of America note, which again, you can find the Bank of America note. I mentioned this in the morning meeting within Pat's note from Friday morning, and it's worth a read. I had reread it over the weekend. Just give me 1 second. My phone is absolutely blowing up right now. All right, whatever. I had reread it over the weekend. It just sounded really compelling. And then we had CES today, AMD speaking, NVIDIA speaking. So there was an extra catalyst that was there. and just felt that if this thing could really clear through 500 bucks, I mean, this is a big pattern here that's been building out for months with this ascending triangle here, that it could be a really big move to, I thought, 520, 525, and lo and behold, here we are after hours trading above 523. And big shout out to Josh, because Josh, I wanted to buy more, even though I already had a really big position in it. I wanted to be able to have more for the breakout. I struggle, as I've discussed with you guys in the past, sometimes to be able to purchase really on the way up if I'm viewing things that are like kind of extended. And the first bar where it touched 500, I was like, oh man, like, this is tricky execution, because if you're buying 500 bucks here for the momentum breakout, you're taking on $5 worth of risk, which it could get to 525 today, so it's still not like a terrible risk reward. It's an expensive stock, but I really didn't want to come in and risk $5 on an ad when I already had plenty of stock, but I did want to be able to get more. The second bar, we pulled back to 498.43, and at 498 and change, Josh just said in the VTF, he's like, if you want to buy 500, you might as well just buy 498 or so, right? Like right here. And I was like, damn it, he's right. That's not how I really like to trade, honestly. I don't really like to add after kind of a bigger move like that as a general rule. But I also knew that there's possibility that this thing could run for another $25, and I wanted to try to be able to have more stock. So I bought like on the way up through 499. My price is 499 and change. I just gave it to that bar's low, which is also not how I normally trade. Normally I like to have my stop loss at a price where the ADMA has caught up to it, so I can feel confident that my idea is right or wrong if I'm getting stopped out. But I said to myself, you know what? I'm not going to lose my core position no matter what. And I almost kind of said to myself, who cares if I lose 80 cents on this ad here? And I can actually even take it with some size. If I get shaken out of it, whatever, it'll be, 80 cents of a loss on some shares in NVDA, and I'll still have this core position that I can still trade to be right or wrong. But if Josh is right and this thing really just goes and just rips through 500, I'll be able to have all this extra stock. So shout out to Josh for the call out there. I added, back up through 499, less than $1 risk. Almost doubled my position, and then it gave me a lot of stock to actually be able to trade on the way up, which was fun and profitable, because otherwise my game plan on my core position wasn't to sell anything until over 520 into 525. I just would have been sitting on the entire thing. Instead, I got to trade some NVIDIA all through this, selling some on the way up, buying some on the way down, working the ranges a little bit, just all off of the added stock that I had there. And it just turned into a really, really good trade. So that ended up being kind of my main focus today. Apple worked out pretty well. The buy off the 200-day into 180 that we had talked about on Friday. If you kept some, if you swung some, I was looking for a move to 185. I got that. I got out of it. So that was a good little, kind of couple-day trade there. And that was it. We had some other things on the radar today. I didn't really trade anything else. I just managed my positions with everything else. I know we're looking at Amazon for the inside day and up. It looks like that sort of worked. Meta to see if it could give some continuation, which it did, but it was also kind of weakish at a certain point intraday today. We talked about the crypto names a bit, which were all over the place, and I ended up staying away from just off that tighter inside day that you could trade momentum in either direction if they potentially go. And that's pretty much it. It's pretty much all I got. I think that the bigger, more important update is just the update on the indices as a whole here, potentially giving that lower high. We'll see if we can get confirmation in the near future on a higher high. We have CPI, I think, on Wednesday, which obviously should affect this big picture in a major way. And then we've got earnings season really kicking off on Friday with a couple of banks. That's all I got. That's all I got. I'm happy to answer any questions that anybody has. I think the first thing I'm seeing here is from Cold Smoke Brian. What gave you such high conviction in NVIDIA going back to last week? Was it the ascending wedge pattern and your overall bull view of the market? Yeah, basically. So I was just thinking about NVIDIA. If you go back to the last earnings that it had, so obviously if you go back 2 earnings reports ago, that was the one that knocked everybody's socks off and was insane, and it had that huge move, but really it trended from there, working its way all the way up to like 480. And then I think that this was the next earnings report here, where this was actually also a phenomenal earnings report, but they sold the news, which at that time made sense to me because I felt that the stock was expensive, had gotten ahead of itself off that last move over the course of that quarter, and they sold that news. But in the process of selling that news, they created this really important resistance to 500. It got tested multiple times, and I didn't trade NVIDIA at all through any of this period of time. But to me, it seemed like an expensive. To me, it seemed like, and I'm no fundamentalist, an expensive stock after this first earnings report, even though it was a game changer, and a less expensive stock. I mean, by definition, it was a less expensive stock after this next earnings report, where the numbers got even better, but it stayed broadly within the same price range. So that's like kind of the bigger picture foundation of it. 500 is very clear, obvious resistance tested 1, 2, 3, 4, 5, 6 or so on major occasions. That's not even counting individual days. And then more recently, you begin to build out this ascending triangle. I had started to go after that ascending triangle back here at the end of December. And then that had a deeper pullback, which again was the trickier part for me. I was just looking for this move kind of into the end of the year and expecting the market to be on my side. Knowing, of course, the market can give a pullback like it did. It gave a strong technical correction in January. I've been of the thought process that this pullback that we've seen so far in January has been more about tax-related selling and rotation than it has been about real selling coming into the market. Though that was not a one-day phenomenon. It was a little bit longer than that. It lasted for pretty much all of last week. But watching NVIDIA into that pullback, and luckily just the combination of my extension rules and my 15-minute rules, I never got stopped out on this pullback. Though to be honest, it pulled back deeper than I was planning on kind of holding it for. I just never got stopped out because, again, I have rules for how I stop myself out of positions, especially if things are going against me at the beginning of the day, and I never actually violated those rules. And then really what this turned into, by the time we traded better on Friday, was that the low here on the 3rd is all of a sudden actually just the next higher low within this ascending triangle. So all of a sudden I'm like, wow, okay, this actually isn't the end of the world. It's just potentially the next higher low in the ascending triangle. And I really liked the relative strength that started coming in. Really, it started coming in on the second half of the day on the 3rd. I wonder if I can even find that on the chart here. So you can see here on the 3rd, just going off of memory, NVIDIA made its low in the first bar of the day. And by the way, I would have gotten stopped out of NVIDIA if it broke new lows that day, and I wouldn't. Maybe I would have found a way to buy back in on the way up, but I wouldn't have had that core position if it broke new lows on that day, which the Qs I'm pretty sure did, and the SPYs I'm pretty sure did. Yeah, you can see here. So you can see NVIDIA made its low on the first bar of the day on the 3rd. The Qs continued to trade lower, and even trade lower the next day, and even trade lower the next day. NVIDIA stopped doing that. It actually started showing relative strength in the second half of the day on the 3rd. That relative strength actually followed through on the 4th when the Qs were making new lows. And I think that this was the day on the 4th, if I remember correctly, where Intel got smoked off Mobileye. Yeah, they did buy it back up. But there was just relative strength versus semis, versus the Qs, versus the market. Just a lot of ways to look at it. And again, I'm still in my position, so I'm liking the relative strength, but I just got my stop loss in. But it's just when I'm in a position, I'm also watching it very closely. If I wasn't in NVIDIA, I wouldn't have probably noticed this degree of relative strength, but it was there. And then the note came out on Friday. Um, the note came out on Friday. Read the note Friday morning. I was like, oh, this is really interesting because my whole thought process on NVIDIA is that it's an expensive stock, and it's an expensive stock for a reason. But they made the case. I'm seeing if I even still have that note open. Oh, yeah, they made the case here. You guys can, again, go read it for yourself. They made the case that, like, on a historical basis or versus the other Magnificent Seven stocks, it's not that expensive right now, and that there's actually room for this thing to basically become more expensive, which goes back, I think, to what I was talking about on NVIDIA's daily chart, where I said I viewed the stock as expensive here in this first quarter, but not as expensive in this next quarter because these numbers were so good on that next earnings report, but it stayed within the same price range. And then this thing made the case that it's going to end up having $100 billion in free cash flow in 2025, which is just a mind-blowing number, but also made the case that there's room for multiple expansion basically at this point in the stock, and that it's trading at a discount compared to other Magnificent Seven stocks. And whatever, I don't know if these analysts are right or wrong. I don't care if these analysts are right or wrong. I just felt that this was going to have a lot of eyes on this and helped create the relative strength on Friday. And then you have that really good relative strength on Friday. You wake up this morning and it's relatively strong. And then you also have the CES today. My only worry was that they were going to give the breakout through $500 ahead of the presentation at CES and then actually sell the news, which luckily didn't happen. That was kind of my one worry on it. But I always felt from the beginning, as this entire pattern was forming, and I've tried to be involved in this since the end of December, this has just been a trade for me where I've been trying to keep it tight, but actually have significantly more size than I typically have for a lot of my other swing trade type positions. Because I felt that if this thing just on a technical basis can break out through $500, there's a lot of room here. Technically, what's this low? 392. 392. Technically, you could say that this is the low of the triangle between 500 down to 392, and you could actually double that to have a measured move off of it, which wouldn't happen in a day. But technically, off of this, you could have a profit target through $500 that is $608 and actually have that be reasonable. One step at a time. For my current game plan, I have my reach target's like 560 on it, but my plan has been to, as opposed to what I normally do, which is where I'm incrementally selling on the way up and buying on the way down and kind of working my trades and working them back and forth. My game plan with NVIDIA was I just felt from a technical basis if 500 could break out that the move could be so big off of that I actually didn't want to sell anything. Because when you're doing that strategy that I like to do where you are selling on the way up and buying on the way down and selling on the way up and kind of working things back and forth, that'll be extremely profitable if your stock is in a tight uptrend, or if your stock gets stuck in a range for a while, but you'll actually make less money on momentum moves if momentum actually comes in and just rips higher. So I was really expecting if this thing could eventually break 500, that technically it would lead to a big momentum move. NVIDIA has the capacity to be a momentum stock. So therefore, I wanted to have a game plan where I actually wasn't selling in the same way, incrementally on the way up into extension on small time frames and all that, looking to buy back, but just trying to hold my entire position. And then fine, when it gets to 525 or so, I'll have that be target number one. And then I'll have my reach target be like the 550 to 575 area and kind of take it from there. I ended up being able to have the best of both worlds because I don't like actually just to sit on my entire position as per what my game plan was in NVIDIA. I like to be able to trade and be active and trade things back and forth. Occasionally, I leave some money on the table by that because the stock goes up so fast that I would have made more money if I just held my entire position. Probably a lot of other times, though, it's the opposite. Is Unity moving on that? Down? Unity's moving down. Interesting, because usually these stocks have been moving up when they announce layoffs. Unity expects to reduce 1,800 roles, or about 25% of its workforce, and is trading down on that. Anyway, I eventually got to be able to do the best of both worlds because I had my core position in NVIDIA, and I could say, you know what, I'm not selling any of my core position, but because of Josh's communication, I was able to get that ad, and I was like, you know what, this ad, my stop loss is so tight on this thing, there's a good chance I'm going to get shaken out of it anyway, that this stock I do want to be selling really quick. So I got my risk covered real fast on that ad, and then the remainder of that position, I was like, I'm just going to sell a little bit every dollar, and I'll rebuy that on every pullback that is $1, and kind of work a $1 range in a $500 stock on a percentage of my position of that ad until I run out of it, basically. And that's it. So appreciate the question, Brian. Yeah, definitely a little bit lucky to not get stopped out on that one day of that core position. From Rex. I wasn't happy with my trades today. I was looking for NVIDIA to trade through 500 this morning. However, it was kind of extended at 9:35. That was my problem too. So I didn't get anything. I looked for some secondary trades such as Meta and Mara. I wouldn't call that a second. Maybe Meta could be a little bit of a secondary trade. Secondary trade just means that it's a stock like AMD could be a secondary trade off NVIDIA, or Intel could be a secondary trade off NVIDIA. It just means that it's moving because NVIDIA is moving. I think when you're saying secondary trade here, you just mean that, you know, something else that could have come up on your game plan. Meta and Mara, as the market was trading up, went long Mara. So, I mean, you got to recognize that Mara is going to be not really related to the market. Mara, Riot, Coinbase, they're all going to be trading in their own universe, kind of based on the ETF news that we discussed this morning. And Mara ended up being all over the place. You know, if you tried Mara through the inside day high, it never triggered. I can't fault that. If you bought at 940 here, which looks like that's what you did, versus this attempt of a pivot low into the equilibrium zone that failed, I can't fault you for that also, even if it's a little bit of a cheat on the inside day. What we talked about in the morning meeting was trying to trade Mara and coin stuff just entirely based on the direction in which it's moving. You took Meta at 950, and Meta ended up getting relatively weak out of nowhere. We talked about that real quick in the meeting. Where Snap and Pins were trading really well and continuing higher. I see that this Meta tried to create that pivot point here at 950. Though I do remember when you called that out, I mentioned that I didn't like new longs because where the Qs were at that time. I know the Qs ended up being super strong and breaking right through 400. So Meta still failed just entirely because of relative weakness. Actually didn't fail because of the market. But I didn't love that Meta trade or the new longs off the ADMA potential pivots that were happening with Meta and a couple other stocks, just because I was concerned about the degree of extension on the 5-minute chart into resistance on the Qs at that time of the day. But yeah, I see that failed also. It just ended up being weak. So I mean, it kind of is what it is. You know, you want to make sure you're not getting in your head that, like, oh, NVIDIA is really the one I want to be in, but I can't be in it, so let me force trades in other spots. You want to make sure that you're not getting in your head with stuff like that, which I don't think that you force trades. You know, if you bought Mara at 940 versus the gap fill pivot low, that's definitely a trade. It's not the way that I want to really be trading Mara, because I want to look for the momentum. And if you try to buy Meta versus the pivot low off the ADMA there, I can't fault that either. The only reason I didn't like it was because of the market. And guess what? The market went, and Meta still failed. There was some reason, I know Cody was talking about it for a while, but we couldn't really put our finger on the reason exactly. But there was some reason why Meta was just really relatively weak for a certain point today, and I don't know why. Because Meta was the strongest name on Friday. And we actually talked about Meta in the morning meeting to possibly give follow-through on Friday's relative strength. So Sorry if you're frustrated a little bit on the trades. I really don't think that you did a bad job necessarily on those trades, though I wouldn't consider any of them to be A+ type trades. So hopefully your risk was appropriate. From Rich, after I failed trading Amazon, I went back to my list and said, go after Mara if strong. So I went back to Mara and it went. Okay. Okay. Yeah, Amazon looked like it actually worked pretty well for the most part. Not sure where you got pushed out of it. And Mara just looking at the charts. I don't know where you traded them, but Amazon looks like a much easier trade today than Mara does to me. Mara was like trying to be strong on the 5 minutes. Then I thought it was a short coin in Mara through the inside day lows. Then those reversed back up. That momentum faded. These things were all over the place. Had to revisit my list to say stop doing dumb trades that are not on the original list. I think that's a huge part of it. I find that my best trades happen based on the research and the work that I've done before the market opens, and not just being all over the place after the market opens. So it's primarily my own research, and then to some degree the ideas that you guys put in the VTF in the morning meeting, or pre-morning meetings even better. That's where all my best P&L comes from, not usually the stuff that just is happening intraday. So focusing on my list is really important. You moved your stop up too aggressively in Amazon. Okay, we'll just assess that then. Over in the YouTube from Kevin, feel absolutely unprofessional not seeing the strength in NVDA. I've been trading futures NQ and I found myself shorting 16,580. Absolutely stunned with today's move, but it's on me for better prep. Yeah, I'm not a futures trader, so I'm not a futures trader, so I can't overly comment. I've always felt that just trading index futures is limiting because, first of all, some days I wake up and I don't see an advantage in the S&P. But I can turn to the thousands of stocks that trade to try to find an advantage with something that's in play. And the hardest thing, if I was just a futures trader, would be to not trade when I don't have an advantage, because that's the hardest thing to do, is just not trade sometimes when you don't have an advantage. But two is, if you just trade the future indexes, whatever, you can just still do that through the SPYs and the Qs if you wanted to, but then if you've got all the equity access, then you can really see what the actual components are doing at the same time. What's actually holding the NASDAQ back? What's moving the NASDAQ forward? So, yeah, and I also just don't think that you should be stunned if you've been following the market at all, like we've been talking about here in our meetings, that yeah, it's a big move. 2% in one day, like I said, we're taking the elevator up and the escalator down. But I don't think that you should be surprised that the market's attempting to create a pivot low within an uptrend for trend continuation. I think if anything, it's what we're expecting. From Bright, what do I think of CAR? You asked me about this, I think, last week. If you're looking for the extension trade in CAR, I wouldn't be looking for too much more than like $172. So you're almost there. You could get a move to as high as 175 to 177.50 maybe. But as far as like immediate expectations, now that the market is bounced, I don't think you can really expect too much more than it to get back to its equilibrium zone from the low end of the support there. Thoughts on Clack? Clack looks good. It looks like a lot of these other aggressive, more growthy names that had big moves, big pullbacks, and interesting pivots. I think it looks good. Kevin saying, I thought non-farm payrolls would have pushed us lower. I understand that. Now Unity's moving higher here. I should have been trading this instead of doing the meeting. There's an opportunity to buy stock all the way down to 37 there. So the thing about the non-farm payrolls, a couple things. One is you do to some degree want to make sure that you interpret the price action at least as much as you interpret the number. Because what you can see here is though there was an initial move lower, that was negated within 20 minutes or so. So on Friday morning, what we were talking about is as long as the SPYs are actually holding above 466.40, which is the starting point of the 830 number, on the small time frame we're bullish, and we never violated that price again. We got above it, we never violated it again. And so well, is there a technical reason kind of behind that? Well, there's the revisions. You want to be looking at the revisions as well to the last couple of numbers that seem to some degree have negated the hotness of the number that came out on Friday. So I hope that helps. All right, cool. I'm going to end the meeting. For some reason, like a whole lot of people are just blowing up my phone as soon as this meeting started, so I got to get back to a couple people. I hope everybody had a great day today. Have a wonderful evening, and I will see you all tomorrow.